Thank you for tuning into the Northern Miner here at the Precious Metals Summit in Beaver Creek, Colorado. I'm pleased to introduce Jon Deluce, the CEO of Abitibi Metals. Abitibi Metals is exploring the B26 gold, copper, zinc, and silver deposit in Quebec. It is now a 50% owner with a pathway to earn up to 80% via SOQUEM, and phase 3 drilling is underway. Welcome.
Thanks for having me.
All right, so I've set it up briefly for our viewers, but let me ask you, what are the top 3 things people should know about B26?
Yeah, I think really the uniqueness of how we've purchased or auctioned the deposit. This was owned and explored by the Quebec government for almost 25 years. So we're the first public company to option and work at B26, and we've been able to build up quite a meaningful deposit in 1 year of owning and operating the asset. 18.5 million tons combined, 2.18% copper equivalent. But really one thing to note for your viewers, with the torque on the recent gold price going up to 3,600, we were to use current gold and silver prices, our copper equivalent would go up to about 2.65%. So a lot of torque, having 4 elements, copper focused, but with a higher grade gold credit. So it's a very exciting time to be with a polymetallic deposit in a great jurisdiction like Quebec.
Okay, so what are the critical path items in terms of technical studies, spending, and milestones to move from that 50% ownership to 80%?
Yeah, so I guess to note, with the 50%, we were able to do that 2.5 years ahead of schedule. And we have up to 7 years to complete the ownership earn-in of 80%. We're going to do that well ahead of schedule. So we are fully funded to complete our obligations with SOQUEM and Investissement Quebec. So at the end of this current drill program, we'll be done our $14.5 million spending commitment. The only remaining milestone will be a final top-up of their equity to 9.9% and the delivery of a PEA. So the delivery of a PEA is part of our plan and objectives that we're working towards, and something that I'm sure we'll talk about a bit more.
All right. Yes. So what does your current geotechnical program really entail? You're doing VTM studies, gravity work. How has that reshaped your understanding of the resource growth thesis?
So I think there's 2 things. As you mentioned, there's the VTM and gravity, and then there's what we're doing on the immediate deposit. So the nice thing is B26 is only 1.6 kilometer strike of what is an 8.4 kilometer trend. And we're also next door to the historical Salbay mine, which produced 53 million tons over 20 years. So first, with your initial question, the VTEM and gravity, we've done that property wide because we think that there's strong potential to make a standalone discovery outside of B26. The last step that we're doing in terms of our targeting is right now we are running geochem over the deposit with every method. We're doing that to determine what geochem method will pick up the signature of the B26 deposit, and then we take that property wide. But then looking at the deposit scale, we have 3 drills turning as of today. We're drilling 17,500 meters between now and the end of the year. And this is the first large-scale expansional drill program that we've done at B26 to date. So what that means is we're really swinging to showcase the large-scale growth potential and how this could be a cell-based deposit. We think that if we're hitting in some of these up to 500-meter step-out holes, that we can show a clear pathway to 30 million ton plus, and that's where this gets really exciting. And just to note, last week we announced our initial results from our phase 3 drill program. We drilled 3.65% copper equivalent over 21.5 meters, and that had a gold credit of 1.15 grams per ton. So really high grade. We're expanding this zone in the Western Plunge. And again, our thesis of the gold grade picking up at depth is holding. It is something that really makes this deposit unique.
And I'm sure you're getting some traction with the gold price doing what it's doing and spinning this deposit towards the gold edge it has.
Yeah, exactly. Like we have 370,000 ounces of gold in the 2024 resource. But to put it in perspective, because it is tough to evaluate all the elements that we do have, this is a 2,050,000 ounce gold equivalent resource. So this is a large scale deposit. And really at our market cap today of 35 million with $60 million in cash, it really highlights the opportunity that we have at the table today. We are viewed more as a copper developer than a gold. So we're not seeing the same tailwinds that a lot of the gold juniors are doing at the moment. But I think our day is to come. This is a very strong deposit. We look at our competitors in Canada, which is really only two that have either billion-dollar market cap or multi-hundred million market cap. So we're very confident that we're close to getting this over critical mass and attracting a strategic partner that helps validate and work with a partner that is our end goal of who's going to buy this asset and develop it at the end of the day.
Well, talking about partnerships, what early conversations, if any, are you having at the moment in securing a partner?
So I think we're advanced along that process. We presented, I'd say, to almost every major. And the unique thing about this is not only the Quebec producers, and I think this highlights where the industry is going. 50% of copper supply is from areas of political instability. My producers have been penalized for being in risky jurisdictions where you have nationalization risk. So not only are we seeing interest from the Quebec producers, whether it's gold or base metals, we're seeing interest from operators that are currently not in the province that need to bring their production profile back to tier one jurisdictions. That's what their shareholders are asking for. And there's, as I mentioned, there's so few high-grade polymetallic deposits in the market. And besides the gold price, betting on $6 to $8 a pound copper that I see in the medium term, the robustness of this deposit is very significant. We're right at the critical mass mark now with potential positive returns in the mine plan. But under that scenario, even without adding more tonnage, this is a very economic prospect.
All right, one to watch. Is there anything else important to the story that we should add that I've not asked you about?
Yeah, I think the main thing is we're in a great position. We're fully funded out to Q1 of 2027. We'll start 2027 with $2 to $3 million. So we are very confident in the plan that we've set out. This year, we've added some key team members and build it around the asset of who has the direct experience in developing basically a hybrid VMS system. So we're not coming back to market. We're confident that the market will see the value that we're building at B26, and then we'll be in a position to scale. This is a project that should be drilled 50 to 75,000 meters per year. We're confident that we're going to get there. How exactly we get there? Do we get there through being able to show positive internal economics? Do we get there through a blockbuster goal that this project has the potential to deliver? Does copper start to run like it did last year and really the market wakes up like it has with gold? So there's lots of catalysts on the horizons, but we'll be ready to expand when we get the opportunity.
I'd like to finally ask you, who are your major backers?
So we did our last financing. It was a bought deal with BMO. So we're a very small company to be having a financing with BMO. I think that helps showcase the potential that they see in what B26 and Abitibi Metals could be, but also the fact that they helped finance some of the key groups that were behind the Forant story. So I think there's parallels between Forant's polymetallic deposit in Saskatchewan. This was a project that traded in a range up to 2020. They brought it over critical mass and it just took off. And that's where we think we are. We've demonstrated a large deposit. This is a potential 10-year mine life, but is it economic? That's the question that we're working hard to answer.
All right. That was Jon Deluce, CEO of Abitibi Metals. Thanks for joining me.
Thank you.